Hi, this is Roger Conrad. I'm co-editor of MLP Profits with Elliott Gue. What I want to talk about today is address a question that we've been getting from some of our readers, and that is, have MLPs entered a bubble phase? We've certainly seen some massive gains since we started MLP Profits about 18 months ago, and pretty much everything has done well. And yields are certainly not as high as they were at one time either. So people have asked, well, should we be taking profits? Have these things gotten too popular? And I just want to sort of caution against that sort of talk. I mean, obviously, we try to buy these things at as low prices as we can get. We've had a pretty tremendous rally since late summer that not only wiped out the losses from the flash crash, but also have catapulted a number of our favorites to new highs, such as Enterprise Products Partners being a pretty good example. So you don't have those same very low valuations that you had at one time, even as recently as this summer. But you know, in order for a bubble to take place, several things have to happen for a real profit exploding bubble to take place. And one of those is business fundamentals have to be overstretched, overextended. You know, it's not just valuations alone that will take things down. You have to have some sort of event or catalyst that really makes these whatever you're talking about not worth as much, and really collapses the value on that. And that's not the case with these MLPs today. If you'll look at the upcoming article that I've written, that will be appearing on the website. And you'll see a couple of our recommendations have reported earnings. You'll see that business has never been better. So there's a reason behind the low valuations now. You know, for one thing, companies are having no trouble finding new projects. They have the lowest capital costs ever, and to finance those projects. And we're seeing cash flow growth and distribution growth really unlike anything we've ever seen before. So, and as these companies get larger, the opportunities have expanded for them. So, you know, it's a pretty nice cycle that remains in place. Admittedly, you're paying more for it now, but in order for this to really collapse, I think you'd have to see pretty much a build it and they will come mentality within management. In other words, companies going out building projects, building pipelines and so forth without first signing on customers and on the speculation that the capacity that they're building will be filled. We've seen this happen before, actually, in history, but we're nowhere close to that now. All these projects that we're seeing are fully contracted pretty much before even any financing is raised, before any shovelful of dirt is turned, and so the cash flows are very much a known factor. How are companies able to do this? Well, low cost of capital has a lot to do with that. They can really enter projects that may not have been that profitable at a higher cost of capital. In other words, if it had cost more to issue debt, more to issue stock than it does now. But now with both of those at very, very low rates, and interest rates being low, unit prices being very high, it doesn't cost them much to issue capital. So projects that were once not so profitable are now extremely profitable. They don't have to take a lot of risk, in other words. Again, this is not something you see in an industry where a bubble's about to burst. Another danger that people have talked about has been the threat of rising interest rates. But again, as we pointed out in MLP Profits, MLPs have basically decoupled from the benchmark interest rates, particularly the 10-year Treasury note, which really called the tunes for many years. They've been decoupled. In other words, they basically have not responded at all to interest rate turns since you know, for the last couple of years. So you know, maybe someday they'll match up again, but at this point they're not following interest rates. Now, fundamentally, interest rates have been fairly important for MLPs over the years. But if you look at what these companies have been able to do with these record low interest rates, borrowing rates, they've been able to push out their debt to very long term and thereby pretty much limit the impact of any short-term boost in interest rates. So, and then you also factor in that the energy producers, their cash flow is tied to energy prices. which will rise if we do have faster economic growth that justifies, that pushes interest rates higher. We'll also see, in the infrastructure-based ones, the pipelines, fees adjust upward with inflation. So you do have inflation protection built into these things. Interest rates really not a major factor right now for MLP valuations. And then the third thing I think to watch if we were to have a bubble would be some sort of change in the tax status of MLPs in the United States. If anything, they're going to become more valuable come 2011 when dividend tax rates might possibly go up. But the threat is, well, maybe the government will turn around and start taxing these, much as the Canadian government did with the income trusts back in 2006. Well, MLPs, unlike trusts were in Canada at that time, MLPs are a very, very small sliver of the market. So there's not that kind of pressure. Number two, they enjoy a lot of support in Congress. And number three, the only MLPs that are endangered in terms of tax status are those with carried interest. That does not apply to any of the energy-focused MLPs that we've been recommending. So, that's 0 for 3 as far as a potential for a bubble. We do have higher prices. We do advise you check out your buy targets before you buy in. We've raised a couple in accordance with some of the earnings results we've seen. But so you want to be careful. You want to make sure that what you pay for. But no bubble certainly. Therefore, you can rest easy if you're in these things at lower prices. So thanks for tuning in today. We'll look forward to chatting with you next time.